What's going on YouTube world? Austin Zaback here with another YouTube video, and in today's video we're going to be talking about the real estate market, the housing bubble that we're in 2020, if we're in a housing bubble. And we're just going to kind of break down all the facts and figures that pertains to real estate, the housing market, the housing bubble. And are we actually going to see a real estate market crash in 2020? So let's just go ahead and kind of dive into it here. I don't want to waste a lot of your time. If you're brand new to my channel, I would really appreciate if you just take a quick minute, okay, and just smash the like button for the YouTube algorithm whenever you get a minute, okay? I'm not going to pressure you. I'm not going to rush you. I'm not going to force you. Just take a minute and just smash the like button. So as most of you know, obviously we've been in the middle of a pandemic, okay? The majority of 2020 starting in March all the way up until right now in October, we've pretty much been in a pandemic the entire time. And a lot of people are wondering, like, Austin, why did the real estate market never really take a hit, right? And obviously there are a ton of different variables that we're gonna break down here in just a minute. So definitely make sure you stay to the end of the video. But yeah, in fact, the housing market never really took a hit at all. So when we look at the housing market, obviously, again, there are a lot of different things that we want to consider, right? There are multiple different variables that we want to consider, and we really got to look at the data to understand what is actually going on. And it's kind of interesting, right? You know, we're seeing a lot of things kind of happen right now in the real estate market that we haven't really seen in a very long time. And people always refer to the 2008 market crash, and they're like, Austin, you know, when is the market going to crash again? And at the end of the day, you know, I don't know that it will, right? But what I do want to share with you is all of the data and kind of the supporting evidence as to kind of just in general what is going on. So for those of you that don't know, I'm a real estate agent, okay, here in Arizona. And I have all of the data kind of actually on my screen here. So we're just going to go ahead and kind of dive into it. And as we can kind of see here, you know, in 2020, you know, it took a big dip, right? Obviously, you know, in the month of, you know, kind of March and April, you know, things were really, really weird, right? And sellers didn't want to sell, right? And buyers didn't really know what to do. So there was a couple month period of time where everything just kind of came to a screeching halt. But what we saw with the actual prices of homes, the price of homes actually never took a hit at all, right? Supply went way down, demand went way up, and pricing. So what we saw with the actual median pricing, okay, throughout the United States of America, according to NAR, right, the National Association of Realtors, is that at the end of the day, supply went down, demand went up, and the actual median pricing of homes actually continued to increase. So we're obviously also seeing right now that there's not a lot of distressed sales, okay? According to NAR, the distressed sales are way down comparatively to previous years. Cash sales are like somewhat normal, but they are a little bit lower. And really we're looking at like days on market, and days on market are also, you know, again, at a very reasonable days on market kind of range. As the majority of you probably know watching the video, okay, you know, the average kind of home, right, is under 500 grand, okay? So from 100,000 to 500,000 is kind of that sweet spot. And when you actually look at the data, about 74%, okay, 74% of all home sales, you know, were under $500,000, okay, which is, again, pretty typical, right? That is kind of your normal, you know, range in which your average house actually sells for across the entire country. And also just taking a quick minute to analyze this graph right here, you know, when we look at it, and again, this is in Arizona, but this is throughout the entire country, right? I have multiple friends throughout the entire country, all the way from Los Angeles to New York City. And, you know, inventory is very, very low, right? Which we just talked about. So, you know, kind of what we're looking at here is we have an all-time low when it comes to inventory, right? Now, what the kind of the thing that has kind of shaped the market that we're in right now is that inventory is kind of at an all-time low, right? And demand is kind of at, like, I wouldn't say an all-time high, but demand is definitely very, very high. And the reason for that is the very low interest rates, right? And we've seen, you know, Jerome Powell's come out and said, you know, basically that we expect to see the interest rates this low until potentially 2023. So when you have supply very low, demand very high with very low interest rates, what does it cause, right? It ultimately causes housing prices to continue to go up. You know, buyers are looking to buy. They want to get locked in into a 30-year fixed mortgage at a low interest rate. And again, there's not a lot of sellers actually selling. Another big thing to kind of look at is the fact that foreclosures, they're at an all-time low, right? And you might either be in one of two different states, okay? Number one is a trust deed state, right? Number two is a mortgage state, okay? I'm in a trust deed state, but when we actually look at the graph, irrelevant to that, it's at an all-time low, right? The notice of trustee sales, AKA, pre-foreclosures, right? AKA foreclosures, okay? Properties that are going to auction, because, people couldn't pay their mortgage, or whatever the case is at an all-time low. And we know why, right? At the end of the day, we saw the CARES Act, okay? Back when the CARES Act came out, the 2.2, it might have even been a $3 trillion CARES Act that basically said, and they've extended it multiple times, that, the banks can't foreclose on the people, right? And lenders can't evict tenants. So you kind of have this interesting thing that we're in right now where, people are actually behind on their mortgage, but the bank can't foreclose on them. So you actually zoom in on this graph a little bit right here, right? And in quarter basically 2 and quarter 3 of 2020, there's literally no foreclosures at all, basically, right? Which is very, very interesting. So you have a lot of people that can't even afford to pay their mortgage, and they're not getting foreclosed on because basically the government came in and said, hey, you're not allowed to foreclose on these people until potentially January of 2021. So the question that I have ultimately is that, when we get to that point, right, when we get to January, assuming they don't push it back again, what's going to happen when the banks are allowed to foreclose on people? And you have all these people that are behind on their mortgages, people that haven't been paying rent, what is going to happen? And what I personally think is going to happen is ultimately a bunch of people are going to get foreclosed on at once, right? And what is that going to do? That is going to increase the inventory, and demand in theory is going to stay about where it's at right now. So if inventory goes up and demand doesn't continue to go up, then ultimately that should cause housing prices in theory to go down, which is one of the reasons that people are saying we're in a housing bubble. And we already talked about this one a minute ago, but here's a graph representing the housing supply, okay? Obviously this is in Arizona, and depending on where you're living, it is probably fairly similar, okay? But a kind of a healthy, neutral market is typically about a 3 or 4 month supply, meaning that if all new listings were not to come on the market, right, if no new inventory were to come on the market at all, at the current demand that we're at, right, the current number of houses being sold, it would take X amount of time for everything to essentially just kind of dry up, right? And when we're looking at it, we're at like a 1 month supply in Arizona. Again, right back to supply and demand, right? Low supply, high demand, low interest rates, causing prices just to continue to go up, right? Now, a couple of other variables are this, right? People are moving out of big cities, okay? Causing, basically people, all these different companies that have said, hey, you can work from home, right? There's a lot of companies, and I'll show you, that have basically said, hey, don't ever come back to work, right? They have literally transitioned into a work from home type of role. And when you look at that data, right, what it's causing people to do is people are actually moving out of the cities, right? Before, you saw all the skyscrapers and all the big cities, and you saw cranes everywhere, and people were building high rises, and they were building, all of this crazy stuff, as opposed to now, people want to essentially get better affordability, right? And affordability is typically when you go in the outskirts of town, right? When you're not in this city, right? When you go kind of out a little ways, then typically the further you go out, you're buying a new home, right? New home development, okay? And now there's not enough new home development to even keep up with the demand of people that want to move into a new home, right? Which again, by default is causing a low supply and a high demand, because again, people don't care about living in the city, right? They can go to the grocery store, they can get their groceries, they can do whatever they have to do, and at the end of the day, right, they want to work from home. They want to be able to have better affordability, get more bang for their buck, and again, one of the biggest places you can do that is, again, going out from the city. Another really interesting graph that I want to take a look at is the cash purchases over the last, I would say, decade and a half, right? And when we look at it, 2004 through 2007, there was not a lot of cash purchases. And why is that, right? Because housing prices were at an all-time high, and investors do not want to buy at the top of the market, right? Typically, your average investor, right? The majority of investors, what do they want to do, right? They want to buy low and they want to sell high, right? So, investors, if they think that we're at the top of a market, they're waiting, right? They're staying liquid, they're staying cash heavy, and they're waiting for a market correction to go and essentially buy up a bunch of stuff. right? So then we saw in 2009 through, I would say, like 2012, 2013, cash purchases kind of skyrocketed, right? And it made up all the way up to like almost 45% of all transactions because they were buying everything up, right? And they were making a lot of money. And you hear that, right? You hear people talk about how riches are made in a down market, right? And housing prices were very cheap from 2009 to 2013-14, right? So, now from 2013-14 to 2019, it kind of levels off. And then you see in 2020, it start to drop, right? And so, we're not quite as low as we were in 04 through 07, but we're definitely getting to that point where you can see investors starting to pull back a little bit. They're staying cash heavy, they're staying liquid, and they're waiting for a market correction to go buy up a bunch of real estate. So everything kind of wrapped up into one. Obviously I'm looking at another Redfin article, and Redfin did a report talking about how new home development, right, is down 33% in August of 2020 compared to August of 2019, right? So, there essentially is not enough supply in new home and existing home to keep up with demand. Cash buyers are leaving the market. Interest rates are at an all-time low. Supply is at an all-time low. Demand's at an all-time high. And overall, it's just a very interesting time that we're living in. Now, obviously, nobody can predict what is going to happen in the real estate market. But again, Jerome Powell comes out and the Fed has talked about, keeping interest rates at an all-time low, right? So, if that continues to happen, right, and they keep essentially printing money into the economy, and demand kind of stays high, which it will when interest rates are low, then I see housing prices kind of staying where they're at or even going up even more. And, we'll see over the course of a year or 2 years or 3 years what ends up happening with real estate. Now, there's a lot of different variables to consider, some of which I probably didn't even mention today. And if you really like the video, what you'll do is you'll take a quick moment and just smash the like button for the YouTube algorithm, and I'll make more videos just like this. If there's anything I didn't cover, definitely let me know down below. But, essentially, we're going to have to wait and see what ends up actually happening, right? There are different rules and regulations and guidelines than there were in 08, right? It is a lot harder to get a mortgage, right? It is a lot harder to get a loan than it used to be, right? The guidelines, the restrictions, the regulations, it's way harder, okay, to get a loan or a mortgage than it used to be. So, if we do see a market correction, right? If we see a market crash, if we're in a housing bubble, the reasoning for this one, as opposed to the reasoning for the last one, in my opinion, is going to be entirely different, right? It is not going to be for the same reason, okay? So just understand that and wrap your brain around that a little bit, right? And let me know, right, again, in the comments section below if you actually do agree with me or not. I would love to hear, kind of what your thought is on that, okay? So, guys, I really appreciate you for watching the video. Thank you so much. It means the entire world to me. I've got a bunch of links in the description down below. Definitely go check that out. Again, if you haven't already, I would really appreciate it if you just took a moment and just smash the like button for the YouTube algorithm. And I look forward to seeing you in the next video.